Alrighty, folks. One of the things that makes One Rental at a Time different is we bring on experts from across the industry, and we have the boys from Convoy Home Loans who are helping dozens and dozens of One Rental at a Time fans each and every week. Dustin, how you doing?
Good. How are you?
I'm doing great. And Jonathan, how are you?
I'm all right. I realize we're kind of matching.
Yeah, you guys. Did you guys like text each other, wear gray shirts?
I didn't even realize it. Yeah.
It's
Yeah,
rare, to be honest.
Yeah.
we're like actually matching.
White black fans.
Oh, that's pretty scary. Well, hey guys, one of the things I love to do in our first video each week is just talk about what's going on in the market. I want to just kind of lay out what might be ahead of us all and acknowledge that it might sound scary, but it's actually a really good thing. And this is what I mean. I think over the next couple of months, rates could be going higher. I think it's very common that the 30-year mortgage rate will hit over 7% today. I think at the end of the day, I think lending is generally speaking getting harder for most people in most deals. But at the end of that statement is, so what? I think the so what is, as somebody who's been doing this for 22, almost 23 years now, frankly, the harder the lending, the better the deals. Because harder lending is harder for everyone. And it's harder for the sellers know it's hard. So they're more flexible. Maybe they take small seconds. Maybe they take haircuts on price. Maybe appraisers are blowing up deals by marking declining markets. So yes, it's getting harder. Yes, it's getting more expensive, but I want my audience to realize this is the time where creativity can come in. And my best deals are done in hard markets. Frankly, the best deals I ever did is when I couldn't get a bank loan. I had to go hard. I had to go private. I had to go non-QM. So did everybody else. And that's where I got my best deal. So what are you guys seeing out there?
I think you hit probably the nail on the head in terms of this is where best deals are created. I mean, that's what we're telling a lot of like agents we work with and a lot of our loan officers and just clients in general. This is the market you're creating deals in this market.
Correct.
You're not picking deals out of a batch anymore. You're making deals that weren't deals into deals, right? That's what we're talking about. And we are seeing a lot more of that come up. And I think the market is shifting in that way, and we're going to continue to see that be more common in the coming months. So everyone just needs to focus on how do we make a deal out of basically a deal that didn't exist previously.
Yeah, I think the key, Jonathan, you bring up, which maybe people aren't hearing, but I'll put it out in black and white, is we as buyers, aka investors, we are going to find the motivated sellers, because not all sellers are motivated. Some sellers are like, hey, give me my price, give me cash, or I'm not selling. Well, guess what? That's not a motivated seller. It's very likely if they're in the luxury market, they will just take their house off the market. That's one answer. The other answer is, damn it, my house has been listed for a while. Yes, it's not perfect. Yes, I know it needs repairs. Yes, this, yes, that. Well, you know what? I gotta sell for whatever reason. That's when us as buyers, people who have a buy box that watch the market, people who work with Convoy Home Loans could say, how can we structure this? This is what I think Convoy is going to be doing a lot of here in the next 2, 3, 4 months is, tell me what you're working on, Mr. or Mrs. Investor. How can we structure this? Because you guys just bring more and more products to bear, and that's what you guys do. So I'm encouraging people to bring, I don't know, opportunities or potential deals to you to see how you can help. What do you guys think of that, Dustin?
Yeah, no, I think once again you hit the nail on the head, like John said, and what makes us different when you come to us is obviously the fact that we do have the creative financing available. It isn't just it's hard and almost impossible if you're going to your retail bank or Quicken or Rocket or UW.
Exactly.
Do something creative, right? They're not going to allow seller carried seconds. They're not going to allow any or do any sort of, let's say, bridge with rehab or some sort of investment property loan with no tax returns needed, which we've spoken about a bunch on DSCR. But it's really, like we've said in the past couple of minutes, there's a lot of deals for those people that you can find that are actually motivated sellers, where it's negotiating and being able to get a deal in this market with rates going up makes it harder for those that are trying to go conventional, and it makes your offer stand out obviously a lot more.
Yeah, we're going to find out in the next 3 or 4 months, really the rest of the year. The second half of the year is generally slower. right? We're exiting summer into fall and winter. This is where I've done most of my deals. Most of my deals were done October to December, just because I am consistent and I'm patient and I can wait out and find the motivated sellers. And then I'm not opposed to writing crazy offers and just to test the market. So again, I think people need to work with Convoy because the other thing that you guys have done, and I don't know that I've said this out loud or certainly on video, you've told some one rental at a time fans that that's not a deal. And I value that, right? You're not just here trying to slam a loan product. You're going to give them caution. Now, if they want to move forward with it, that's on them. But I've heard from multiple people that you're like, hey, you know, Jonathan or Dustin or both have said this is not a deal, which meant go back and get a better price, go back and do something different. So I want to thank you for that.
Yeah, no, it's something that we take pride in because, you know, we always are going to give our honest opinion. Would we do this deal if it was us in their shoes? And
Yeah.
ultimately, like, you know, I can only tell somebody or advise somebody, or John can, you know, what we think. Now, the client may think differently, but when you pencil out the numbers in terms of, look, the cash flow isn't there. It might take you 2 or 3 years just to break even. That's not something
Right.
we want, first off, advise you to do, but then the bank's not going to want to do it either. And if they do, you're going to get a much, much worse term than if you go back and negotiate the deal or go back and get a price on it.
Yeah. Yeah. One of the things that I think if somebody would have asked us a month ago, what are the chances of having 8% mortgage rates? I think all of us would have said 0. Now, I don't think the odds are high, but I don't think there's 0 anymore as well. With what's going on with the economy, GDP up, unemployment rates claims down, Powell talking tough. I mean, do you guys think there's you know, something above 0 chances of having an 8% average mortgage rate sometime this year, or do you still think that's 0? What do you think? Good.
I think I don't know about 8, but I think we'll get maybe mid there at least midway, at least conventional primaries being, you know, mid 7s, high 7s. But I don't know, like 8% right now, it doesn't seem as scary as it used to, just because we're, you know, the investment loans are there, right?
Yeah, they're already there, right? Yeah.
So we've been kind of accustomed to it, and I think that's where the rest of the market needs to be, right? Everyone just needs to get accustomed to it. But you know, rates going up is a thing now, right? Everyone's on the same page, or should be on the same page. If you think rates are going to go down this year, and you're betting on that, because we have clients that are literally betting on rates going down, they're like, we don't want to go with you because you tell me rates are going to go up, or I think rates are going to. And you know, we've had that conversation multiple times, and you can only lead a horse to water, right? You can't make them drink it. So we've been saying rates are going up. We haven't ever, I don't think, on the channel said that rates are going down. I think we've only said that like maybe in the next 2 years, maybe, but not like this year. We've been every single time it's been, hey, rates are going up. If you like it, lock it. That's been the story every time. Yeah.
How about you, Dustin? You see any chance for 8% this year? You're going to cap out at 7.5 like Jonathan?
You know, do I see any chance? Sure, just because of what we've seen in the last year and a half or 2 years with the unpredictability of not only the market but what the Feds are going to do, and you know, make it clear to the audience we're talking your average 30-year fixed conventional primary residence, right? So like,
correct.
If you have a 680 credit in about 2 weeks from now and you're putting less than 20% down,
you could be there.
Okay, so the average, I don't think it's going to happen, but betting man, I put
not 0 though.
You know, so very little, but it's possible.
Yeah, I think it's really interesting. I think, Jonathan, you brought this up. I think the peak last year was 7.38, if I remember right. So what you're basically saying, and I think both of you are, is there's a chance that we break that this year.
Yeah, oh, for sure. I think we're above 7 this morning after walking into the office. Like
it was. Yeah. What is the 10-year doing up 16 basis points in like an hour? I mean, that was wild to see. So
that's why lock it, love it. If you like it, then lock it. If you love it, lock it. Like right now is the time where you really don't want to mess with the market. And what I've been doing with a lot of clients is like, you know, if you're going conventional and you're working with, let's say, a broker, they have multiple lenders that they can work with, right? Lock it with one lender, float it with another, have them run two at the same time. And then if market gets better, you can always flip over. If the market doesn't get better, you just stick with that one lender. Like that's what I've been doing for conventional loans. Obviously, non-QM is different, but for conventional, it doesn't hurt to do. Like, you know, what's an extra, you know, 10 minutes to click another button. So it's, you know, it's like that's kind of like a strategy, and that's why it's so important to have options like that. Really sets us apart from a bank right now in this market, because the banks aren't giving that like great pricing right now either for people that don't have money.
Yeah. I would personally like to thank Lennar for my 4.99% mortgage, 30-year fixed rate mortgage that they're giving me on my new home purchase. I really like 4.99. That's not 8%.
Really?
So
I think
yeah,
that's a
I think that's a good rate. Yeah.
I think you got to get a better deal.
Better deal. Well, yeah, we can talk about that someday. Well, if somebody wanted to reach out again, run the deal by you, because again, you have the flexibility. You could talk them. Also, you tell them if it's not a deal. Where are we sending them, guys?
Go to convoyhomeloans.com and let us know you came from where at.
Thanks, guys. Take care.